Welcome back to a brand new video on the channel. Now, in this video, I am going to be covering my total stock market investments, which include the ISA as well as my SIPP. So we have my SIPP, which is my self-invested personal pension. I am self-employed in the UK, so this is really my only quote unquote pension that I have ever had and probably ever will have. So yes, this is the update. So first of all, we're gonna do my ISA, and I use trading 212 for my ISA, and then for my SIP, I currently use Vanguard. However, I will start to switch that just because the fees are pretty high. So I am looking for a new provider, but I've just been really slow at doing that, to be honest. And I think Trading 212 have put out a statement, I believe it was last week or the week before, saying that SIPs are pretty much ready to go, or they got the licensing or something around those lines, and they're starting to roll them out. So once they are available on Trading 212, I will probably roll it over here just so it's all in one place and easier to track. So let's start off with the ISA. So my ISA balance is currently at £20,213. It was previously around 2 years ago, around 64,000. And then I have slowly started to take money out of there. And that was for a reason. Um, I was doing some other bits and bobs outside of crypto. I'm self-employed, right? So if I need capital, then I need the capital. And I needed this to pump into a business. So that is all good. But now we are slowly starting to build back up. So around 20K right now. You can see I've used around 4,300 of this year's allowance. I am trying to get a few more grand in here. I don't think I'm going to max it out this year. I do have a couple of things to sell, like one of my cars that I don't drive anymore, and got a couple of watches that I don't wear. So I'll probably liquidate those to put into the ISA. But yeah, so I don't think I'm going to max this out before the end of the tax year, but we will definitely add at least a couple more thousand into this. So how is this looking? Okay, so you can see total returns is 27%, but that includes when I was sort of around here, right? This is overall since 2022 when I first started investing in the ISA. So yeah, how does this look? Well, if we go to year to date, we are down. 3 months, we are down. 1 month, we are down. 1 week, we are down. And 1 day, we are down. Obviously, there is a war going on right now. So that is the reason for this. Now, I have my investments split up into three different pies. Okay, yes, you can count these as well. However, just ignore them. I'm really not interested in these. This was just sort of playing around money. I have some metals, I have some AI stocks and quantum computing stocks that I just chucked a couple £100 in as sort of a fun play. Should I have done it in a general investing account? Probably. But it is what it is. Okay, so the main pies are these three. The long-term growth obviously has the majority of the holdings. This is £16,000 in here. We have the dividend ETF pie, which has just over 1,000 in, and dividend individuals at £970. So let's see how this breaks down. We'll start off with the dividend individual pie. And you can see this is down. Again, I only started investing in this about a month ago. And it was probably a bad time because of everything that's going on. But this is how this is weighted. We have Realty Income at 20%, Legal and General at 15%, Main Street Capital, Aviva, BP, British American Tobacco, Standard Life, and Taylor Wimpey. So we have a bunch of different dividend paying, some UK, some US. And these are just sort of, some of them are monthly paying, some of them are quarterly. So yeah, they vary, but these are just sort of individual dividend stocks that I am going to build slowly over time so that we create some sort of income generation from this ISA. This is down around 7% or around £57 so far. So yeah, it is what it is. Okay, next thing is the dividend ETF. Now in here, we have dividend ETFs. So we have the FTSE All World High Dividend Yield. So this is pretty much just the FTSE All World Fund, but it just tracks the dividend payers. And then we have the VanEck Morningstar Developed Market Leaders, Dividend Leaders at 20%, the City of London Investment Trust at 15%, iShares UK Dividend at 15%, and JP Morgan Nasdaq Equity Premium Income, which is JEQP, and that is weighted at 15% as well. So again, just some dividend ETFs to sort of build a lower risk income, dividend income. Obviously, the individual companies are more risky because they're individual companies and we're relying on those. Versus ETFs are obviously a basket of companies and it tracks a bunch of them. So it's a little bit more safer in that aspect. So these are the two dividend pies that I have. And the goal here is really to just sort of build a income stream from the ISA over time. Of course, I'm not expecting for this to be massive anytime soon. This is sort of a 10, 15 year, 20-year plan. And the investments may change in here. One thing that won't change though is my long-term growth pie. And this is something that again, this is where the majority of my investments will go because I am 24 and a lot of people say, well, why the hell are you investing in dividends when you could just put everything into the S&P or the All World or whatever you want to recommend? And in 20 years from now, 30 years from now, you can start to take money out of their 3% rule, 4% rule and live off of that. Yes, 100%, I agree. That is something that I should probably do. But for me, I like to see progress. Okay, now if I'm just pumping money into the All World or the S&P or this long-term growth pie, I'm not seeing that income slowly start to drip through. When I see a dividend each month from realty income coming through in my dividend individual, it really just sort of helps with that mindset to, you can sort of visualize it and you can see, okay, this is going to get massive as I sort of grow this. So it's just a mental thing, I think. But the long-term growth pie, we were up around 22% here as of January. But then obviously we've had a war breakout. So now we're up around 8%. And yeah, this contains three funds. It contains the FTSE All World, it contains the S&P 500, and it contains iShares Physical Gold. I know there is overlap in the FTSE All World and the S&P. The FTSE All World is around 60% US, so there is some overlap there. However, I do want a bit more concentrated investment in the US. That's why I have both of these. And I think, look, you can't really go wrong with either one of these. So if you have both, again, it's just something that you don't need it, but I don't think there's any downside in doing it. So it's completely fine. Okay, the FTSE World, I'm currently up 3.53%. We're almost touching my sort of average entry, which is around £119. So that would be good to continue to add to this. The S&P is up around 9% here, and our average entry is around £86 there. And then we have the iShares Physical Gold, which is up around 7%. So that is how this is weighted, and this is sort of my long-term growth pie, which is again just the main core ETFs, accumulating funds, and yeah. So every dividend that gets paid out just gets reinvested straight back into the fund. So over time, the compounding will do all of the work. So today you can see we're down around £116. We were down a lot more than that, almost 200. This week though, we're down 700. Now, I did do a deposit last week of around 2.5K. I've used up some of that. We have around 1,700 left in cash before I obviously do another top up. So that's earning a little bit of interest every day, a couple of pence, nothing to really write home about. And that will just sort of, I'll dollar cost average this in, depending on how the market moves over the next week. And yeah, we'll start to obviously get this money in, and I'm going to do another deposit before the end of the tax year. Okay, let's look at my SIPP. So the SIPP, as you can see here, we currently have around £7,252 in here. And this is broken up into three different funds as well. We have the Vanguard FTSE All World ETF, VWRL, and that's around 36% of the portfolio. We have the S&P 500 at 38% of the portfolio, and we have a Target Retirement 2055 fund, which is at around 25%. And you can see how this breaks down. So my total cost basis here in the FTSE All World is around 2,100 and current value is 26.55. So we're up around £539 there. If you look at the S&P, my total cost is 2,226 and the current value is 2,792. So we're up around £565 there. And the Target Retirement 2055, total cost 1478 and current value 1805. So up 368. So a total return of 1.4K so far. If we go into performance, you can see here how this breaks down. I started investing in this in around 2023, so it's only been a couple of years. The maximum that we have sort of had in this balance was around 7,700, I believe. If we go to month, actually, you can probably see this is my total rate of return is £37, right? But if we take a look here, you can see month by month how things are looking. March so far is not looking good. We're down around £400 here. We were up 191 in February. January was pretty flat, although we did get some income from the funds there. December was down, November was down, October was up. Yeah, you can sort of see how this has played out, right? Total returns, though, is around 1,600 with income. And you can see the fees here are pretty high, £12 every, is that quarter? One, two, yeah, every quarter, £12 or so in fees. So I'm not too happy with the fee structure. And I think, yeah, I'm not too happy with it, to be honest. But you can see the sort of average or how we're weighted is 6% Europe, 75% North America, 8% UK, 1% Middle East, 6% Asia, 3% Japan. And this is how the sectors are allocated there. If you want to see that, total return over the past 3 months is minus £200. And that is pretty much it, I think, for the ISA. Sorry, for the SIP. So here, what again, I want to find a new SIP provider. So if you do have any sort of any kind of recommendations, that would be great. I think, yeah, if you could let me know any recommendations for any SIP providers, again, that would be pretty cool. So, yeah, that is pretty much it. I don't think I have any cash currently in the portfolio. Let's see, no cash. It's all either gets reinvested or gets taken by fees. Um, so I know Invest Engine has a SIP. I know Invest Engine has a SIP. In fact, I do have like £100 on Invest Engine, so I'm going to pull that up and show you as well. Yeah, so there you go. I have £100 in my SIP here, which is just in the S&P. So there you go. There you have it. But yeah, I know Invest Engine has a SIP. You can see here that we do have our personal pension there, which we could transfer into. But I haven't done that yet, and I probably won't do that here until I obviously find out something, until I just, yeah, do some more research essentially into this. So let me know where you hold your SIPs, because I would like to move this to a new pension. But obviously I haven't done so yet. I haven't made any contributions this year. I need to get back onto this. It's really kind of slipped my mind. I think I need to automate it a bit more. I'm 24. My pension is only 7K. I don't know if that's good. I don't know if that's bad. I think it's probably fairly average. But I think I need to sort of bump up this here. So overall, my investments are around £27,000, which is what, like probably 35K USD or something around there anyway. So yeah, that is my total stock market portfolio at the moment. Again, starting to go pretty, getting back into the stock market. I was out of it for a while. This is the perks of being self-employed, right? Is cash flow and whatnot. But yeah, that's going to be it for the video. If you have any recommendations or any comments, let me know what you're doing, all that good stuff. Let me know down below. And with that being said, thank you for watching, and I'll see you on the next one.